The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September, how about that? January 11th, magnificent Monday edition of the Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great weekend. Let's make sure that you and I have a great day, a great week ahead. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We get to go see what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. Would love to hear from you on this magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading at flat. Truly flat. We just went to 000. How about that for being able to see the future out there? 16,346 is the number we're trading at. The S&P is off 6 points, trading at 1916. NASDAQ Composite up 28 points at 46.15. Russell 2000 down about 7 at 1039. Gold is flat, trading at 1097. Silver's basically flat, trading at 1390. Light sweet crude is anything but flat, trading at $31.17. Down about $2. Leading the charge here to the upside, individual stock-wise. You have TransDigm Group. That's up about 3.5%, $8. AutoZone up $7. Equinix up about $6. To the downside, McKesson Corp, and the distributor of products to all those good neighbor pharmacies and many more than that, off $19. Interesting, down 10%, 11%. Shire PLC off $16. Regeneron Pharmaceuticals down $15. So number Priceline is off 8. Radius Health down $9. So in a flat market, there'll be plenty for us to go ahead and take a look at. What a sad day, though. Sad day for me to wake up in the morning to find out that David Bowie had passed away. Reason being, it was one of the, not the first concert, but one of the first concert that I went to. Saw David Bowie. Because I know it was in that early stages of going to concerts, I saw David Bowie perform at the Masonic Temple in Detroit, Michigan. I got to assume that it's still there. That building is so large, it's got to be there. Now, I don't know how many seats. Great place to see a concert. I don't know, but maybe 1,200, 1,300, 1,400, 1,500, something like that. I mean, a small venue, great venue to see a concert. That was during the Ziggy Stardust tour out there. It was in the winter time, so I remember it was cold. So January, February, March, April, something like that. So that was sad. Love David Bowie's music out there. In any event, let's take a look at these markets and try to figure out what the Sam heck are they doing out here? So, the question becomes, where do we want to start? Where do we want to start with this? Let's start by taking a look at, let's start by looking at, let's look at some of the daily index, the indexes out here. Then we'll go switch over, take a look at the futures contracts, because I really think they're pointing to something. But let's go try to figure this out. Let's start. We don't look at I don't look at it with you, the daily indices often enough. So here's the Dow. Let's just start off by taking a look at the Dow and see what we know about the Dow. Number one, well, we know we're trading at about 16,332. What do we have at 16,332? Well, at 16,312, we have the top of the swing point from August 25th out here. Is it that swing point, or is it really? I mean, the true swing point is August 24th, but such a screwy trading day, you're just never really sure. Is that the swing point? Is it the day following on August 25th? Here's what we do know. We're traded into that August 25th swing point. We've rejected it. We did that on Friday. We've done that again today. Maybe the market, and it's made a 0.618 retracement. What I mean by that, in this case here, you might say, well, why the heck are you choosing the low of August 24th out there? Visually, I just have to do that. And if we go from that low to the high, right around and this might not have grabbed it right to the exact tick out here. In fact, it doesn't look like it did. But to the high of November 3rd, we're basically trading right around the 0.618 retracement level, 16,371. We're not going to worry about being exact here because we use these as guidelines anyways. Now, if this level fails, price continues to move lower, and I can't tell whether it is or it isn't, the next level inside of the Dow will take us down into about the 15,930-ish type area. So the Dow needs to the Dow really needs to find some footing right here. In fact, let's go from this chart, and let's go over and take a look at the 300-minute chart here, 5-hour chart of the Dow futures. And this is the one that suggests to you and I that maybe the market is getting ready to find some type of bottom, a buyable bottom, maybe a buyable bottom. Anything is buyable as long as you have a stop. Anything is sellable as long as you have a stop out here. But what you and I know is that last night, as the market got to work, oh, come on, don't do this to me. I'm not referring to you. I'm referring to my chart out here. And why am I getting a bit of a delay here? There we go. So as the market was moving down into lows last night, which was really like around 8:30 or so, but this is a 5-hour chart that we're looking at, so that candle doesn't complete until 11 o'clock at night out there. But what you and I know, if you looked at the futures, you saw price moving lower. It was moving lower. It was doing it with what? Less relative weakness out there. Now, that is the sign of a potential pattern, a potential reversal pattern in the area out here. And it's completed around other patterns, A to B equals CD patterns, a number of different things. Now, it was really during that next 5 hours out here, when we take a look at the Dow, where you saw that where the defensible line is, where the line is drawn in sand, where the bulls came to work. They showed up very early. In fact, they were working from 11 o'clock at night until 4 o'clock in the morning. They went out for a bit of have some coffee during the next 5 hours out there. I said, hey, we've done our work. We've drawn our trench out there. Well, let's see what the bears have to offer up out here. And the bears have been coming to work a little bit late. They really didn't start showing up for work until maybe about 10 o'clock or so. Must have had a nice weekend, some big parties over the weekend. And right now we've got inside the Dow futures, we've got them at work, really towards the low of the session that we're in right now, not the low of the day, right? Because that came last night about 8:30. But you can see that we're also happen to be in wave number 6 to the downside. It doesn't have to get to wave number 7. We've got enough of a reversal signal right here, right now. I'm stealing from Tom out there. So, the work to the downside, one could say that it's over. And if it's not over, price moves lower. And if it does with less relative weakness, like the pattern we saw here last night, well, that might be the hook. That might be the hook or crook to set up the bottom inside the Dow. So we get back. Let's go look at the NASDAQ composite. Let's go look at the NQ on the 5-hour time frame. Let's look at the S&P, the Russell, and anything else you'd like. You just got to give us a holler. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow's off 40. S&P is down 10 right now. Composite's off 38. So let's go check in on the composite, see what we have there, and see what it is doing. So just like we took a look at the Dow, and again, we're in the cash indice right now. If we take a look at it from the swing point low of August 24th up to the high out here on the trading day of December 2nd, we can see really two things. Number one, price is down around the 0.618 retracement level. The actual number would be about 46.30. We're at 46.05, so close enough. We also see the NASDAQ composite is making a move and a test here. It looks like it's not completed that test. The September 29th high, 45.96. We've seen a low so far today of 45.99. So it's moving back into that swing point. I don't know whether there's volume or not in that level, but you know, we've got a couple areas here where you can see 100% move, or you can see that combined with a 0.618 retracement level. It says, okay, what are we doing? What are we doing on some of the shorter term charts out here? You know, just like we look at the 5-hour chart, man. And the reason why the shorter term charts now we've gone to the larger time frame, so to speak, the 5 hours, because because of the huge move that we have had of all of last week, really beginning December 29th out there. So those shorter term charts are not necessarily provided us with the most useful information out here. It's not bad, but it's not necessarily the most useful information. I think the most useful information is coming from the longer term periods. Now, as we take a look at the NQ, really the same thing from the high out here on the trading day of 5:15 in the afternoon. This was on December the 29th out here. We can see that price has been moving lower. Now, in the case of the Dow, we saw it was moving lower, less relative weakness. We don't have that pattern out here. It's a beautiful pattern. You like to have that pattern. Well, the market doesn't always give us what we want. It does not. It did not give us that at this stage of the game. What it did do, though, last night, as price was moving lower, it got to that seventh wave. Created a nice little hammer candle out there, followed up with a nice little bullish engulfing candle. And so that says that this low is really important to hold out here. 4226.25. You're at 4239 right now. You get below that, it says, hey, the wave counts that we were looking at, you can kiss those goodbye, and says we've got to try to figure out what else it might be doing. The only thing that maybe could crop up here would be a new price relative strength divergent pattern, but I don't see that at this stage of the game. But we could have price really pulling back right now, right to a support level. Potentially. Obviously, what you'd like to see is you'd like to see that Dow futures somehow push lower without the NQ doing the same to get to wave number 7 out there. So we'll keep an eye on it because we already have that inside of the NQ. So what is the S&P 500 doing? Let's take a look at it. It's trading down 10 points, trading at 1911. It's trading below. Now, the S&P looks a lot worse than the NASDAQ composite. Looks worse than the Dow out here, right? So if you're going to go ahead and try to take a counter trend trade, which one would you take it in? Would you take it in the one that's the weakest? You might. You might think that it's got the largest bounce. I'd say you'd go in the strongest, not in the weakest. You're going to go ahead and take a trade. We haven't looked at the Russell 2000, but if you were thinking about a bounce, is that where you'd want to go? I don't know. I'd say no. Actually, I do know. I would say no. You don't want to do that. In the S&P 500, it has made its way. It is cracked below the 0.786 retracement level, and that's coming off of the low out here from August 24th. That 786 retracement level, by the way, 1920.40. It's not really doing anything else. If you were just to look at the S&P 500 chart, and we just didn't pay attention to any of the intraday time frame charts, we didn't look at the VIX index, we didn't look at anything else, you would say that the chances are where price is headed to, really simple, 1867-ish area. You get back to where we have that double bottom to see if maybe we've got a triple type bottom out here, a little triple play, a little perfect trifecta. But that's really what it looks like. Now, where could there be, support? It could just be a test of the swing point from September 29th, the top of which is 1899. But what does the ES Mini say on that 5-hour chart out here? So the ES Mini has got the same picture that we just looked at inside the Dow. That same picture is from its high out here. This is back on December the 29th. This was at about 11 o'clock. This is 11 o'clock at night on the 29th of December. If we count from that high, nice little doji candle, all the way down to the low last night, this coming in at 11 o'clock. A lot of work being done at 11 o'clock out here. So at 11 o'clock last night, we had a nice little hammer candle. And then we also happen to have a nice candle session for those next 5 hours into 4 o'clock in the morning. That's when all the bulls were up doing the work out there, creating also a little morning star, little three-river morning star pattern out there. So it says that we should have some really good support. And actually, what's my preference? My preference would be somehow the NASDAQ finds the strength. It takes its guns out there, and it's able to fend off price from going down and getting to below the low of last night. But yet the ES Mini and the Dow Futures, the YM, they are a little bit weaker out here, and they're able to push down. And then we could have singing in the key of G across the board. Of course, that board being the ES Mini, the NQ, and the YM out there. I don't know if we're going to get it, but it sure would be nice if that were the case. So now that leaves us with what? That leaves us with the Russell 2000. And what is Russell 2000 doing? The cash industry, because the future's doing something different out here. But let's take a look at the cash industry out here. Below the August 24th, below the September 29th level out here. Actually, it was August 26th. That was the actual low, not the 24th. That was low inside the Russell out here. It's trading all the way back into the 2013 area. That happens to be, it's really trading below it, or 2014, I should say. So the Ebola panic low out here, that was on October the 15th. It's trading below that. This is clearly a 100% move of a move. I know that it doesn't have the volume just by recalling what type of volume we had inside the IWM. So you got a 100% move of a move here. We don't have it in the S&P. We're below the 0.786. Maybe we're going to get it. We're like about the 0.618 retracement inside of the NASDAQ composite. The same thing in the Dow out here. We're really close, technically speaking, where the market ought to be making a bottom. And if we take a look at those 5-hour charts, we've got the patterns out here. But what the markets have been unable to do, quite frankly, is totally prove themselves. That's not even proper grammar out there. The market has not been able to prove you'll know, I'll get it, prove itself to you and I that it really does want to move higher. And until it does that, man, it opens up those doors to continue moving lower out here. And there's just, the only signal, the best signal, quite frankly, during the last several hours was coming from a 10-minute chart out here. And that 10-minute chart was just simply coming all the way back here at about 8:40. Let me make sure here. This was about 8:40. Was it not? This was on 8:40 on January the 8th. So this is on Friday. And if you go from that high out here all the way down to the low last night, 10-minute chart that we're looking at, that's taking place at 7 p.m., you can see what price moves back, does it with less relative weakness, gets to a seventh wave move to the downside. And where does price stop this morning? It's why, take a look at this. Gets to wave number 7 at 9:40. That doesn't get really confirmed until 10 minutes later at 9:50. Now we're backing down. Maybe, just maybe, we're going to get the next signal that comes from right here, the 10-minute chart for the ES Mini. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 65, S&P 13, NASDAQ Composite down 48 points. You know, when the market started staging that nice little rally last night and through the morning, really was looking at, if this market's going to turn, it's going to do it this morning. It just hasn't done it. But we've looked at enough patterns out there for us to pay attention to. So we'll continue to do that. I had a request to take a look at ticker symbol here, DLS, Delicious Wisdom Tree International Small Cap Fund or something like that. And if we take maybe peek, D, what is inside this wisdom tree? Do you know? Let me see if we can actually find that out. DLS. I don't know that it will pop up here. I think this just grabs me ETF information. Let me see here. Yeah, it's just an ETF profile, so it's not going to do that. But if we just take a look at small cap international dividend paying stocks out here versus non-paying, that's a good thing. So if we take a look at this equity, one of the things that we know, maybe it's down around a level of support out here. It certainly is trading down towards a level that if it holds, which it has in the past, it would be support around 54.38. And I'm just looking at these, 100% move of a move, so to speak. We're looking at the December 15th. Low as a swing point. We're looking at the August 24th level that held as a low. The same thing here back in September 29th. So we're back down here. If you want to take a trade in this, good luck. Take a trade. Exit that trade if you see it close below that 54.38 level out here. Probably, and that would have to be a short-term trade, I would think. Because I do believe that from this point forward, that the better trade setup is to the short side. And so the question is, do you try to take some of these trades here to the long side of the market, and play some counter trend rallies? And we've had a nice enough move here during the last week to say it's a potential. Or are you better off just being very patient and waiting for your next trade to fire away at the short side? Small caps have, as we took a look at just like the Russell 2000, as we looked at this, the small caps have not performed well. If you're trying to take a look at something from the long side, I think you just got to go to what's been the strongest out here, and it's very clear that the stronger indices are things like, the NDX. Take a look at the NDX 100. It has not even gotten down to the 0.618 retracement level. So let's just assume, the same assumption really, you can take a look. Let me get rid of those profiles, by the way. The same assumption would be in a strong market on a retracement, what is it that you want to buy, to play the upside? You want to play what's strong out there. Just as your basic trading, investing philosophy. In a weak market, which we definitely have as we speak right now, do you want to go ahead and play the weak links to the upside, or do you want to, especially in a counter trend, right? At this stage here, if you are of the belief that the markets made a significant top December 29th, forget about the ones of last year out here, and the markets are going to move lower, which is my belief of what the charts are communicating to you and I at this moment. On the counter trend rally, you'd certainly want to play the stronger ones as well. It's at least safer. Right? Maybe it's not going to have a sizable gain that some of those other ones might, but it is the safer trade, in my opinion. In this case here, if you just look at the NDX 100, if we didn't know about all the other demolition and all the other indices out here, the NDX 100, quite frankly, looks fine. Now, looks fine is has to be taken maybe with a little bit of a grain of salt out here. Why? It's got this little island top right here. The trading days, while everybody was snoozing, December 29th, December 30th out here, you got a gap from the prior day on December 28th. You got a gap down. That was a gap up, by the way. You have a gap down on December 31st. Little island back up here at these highs, which is a bearish pattern out here. But still, you would say retracement-wise, shoot, this has not even done at a minimum what would be normal. Not that it won't. That normal, by the way, would be 41.51. You sure would like to see, if this market's going to bounce, you sure would like to see the NDX close back above 42.67 today. Why? Because at 42.67, or just above that. First, 42.67, by the way, happens to be the high of October 2nd. But really the better line of support out here isn't that. It's the one that's already been tested and rejected. And that happens to be the low. Oops, I should make that a red line. Let me do that. Make it a little bit easier for you to see out here. That really is this. That is the low of the candle session where we had that little gap up, that'll sign a strength. That's the low of October 5th, and that's at 42.90. Why? Because we've already seen 3 tests of that area. But on Friday, really during the last half hour, the market said, and that's because that's a line of support out here. So in this case, just your traditional lines of support inside of the NDX 100, those have failed. So what does this really say to me? At this stage here, it says, you know what? The NDX 100 maybe today, tomorrow, next day, probably NDX 100 gets down to the 0.618 level, 41.51. Maybe it gets all the way back to this little swing point from September 29th as well. Now, the high there happens to be 41.55. So 41.55, 41.51 could even be the low of 4,053. We'll have a better idea when we see what the equity futures contracts do. If the NQ takes out that low from last night, which is really not far off from doing that right now. That says, hey, guess what? You still go lower out here because you're blowing through patterns that really should have held as support out here. And at this stage here, now what I was looking for with the NQ actually being the strong guy and let the ES Mini and the YM go ahead and move to the downside, that doesn't look like that is actually coming to fruition. So what is it that's going to change the market out here? What's going to change the market so that we can see some kind of a bounce? Some people are looking for some kind of bottom out here. And the answer is really two words. It's really very simple. It always boils down to a compelling future. As soon as the market is able to sniff out a compelling future, then you will see things move to the upside. As we take a look at China, just as an example here. Of course, now this how can I prove this? Well, I can prove this because it's what motivates you. It's what motivates everybody out there. Look, if you find somebody in your life, now I'm not speaking to you specifically, but if you know somebody out there that's struggling, maybe they're depressed about something. What can you guarantee me? What can you guarantee yourself? What can you guarantee about that person, about that individual? Do you think that if they're feeling low and blue and out, you think that they're thinking about a compelling future? I don't think so. When people decide where it is they're going to go invest, am I going to put money in real estate? I'm going to put it in the bank. Am I going to put it in a business? It's really all you're going to put that money where there's a compelling future out here. And so in order for these markets to really start turning out here, take a look at last week, right? You got, H-bombs potentially, going off. You've got all this, you got currency battles, currency wars. Talk about currency. Did you guys see the South African rand and what that did this morning? Now that's if you're looking to go on a vacation, first you should go to South Africa. If you're looking to go on a safari, go to South Africa. In fact, you ought to be packing your bags right now. It got down to like 59 cents. Folks, that's almost like half. It's 40% off. And things are already cheap over there. That would be a beautiful thing. Dow's off 78, S&P down 16. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You know, I ripped apart the IWM, or the Russell 2000, so to speak. But what's interesting is the message that actually came earlier this morning from the Russell 2000. You know, we saw the markets make a nice bounce off of the lows last night, about 7 o'clock or so, and same thing inside the Russell 2000. Now, this little trend line, just taking us back into about 2 o'clock in the afternoon on December 31st. Nice little trend line. You'll see that if we use that exact same swing point in the ES, the NQ, the YM. This is a 30-minute chart, by the way, that we're looking at. You can use different time frames out here. Nice little descending trend line out here. There might be a compelling future for the markets if they can break through this trend line to the upside. But take a look at where price stopped here at 9:30 this morning, between 9:30 and 10. Right smack dab into that trend line. In fact, that's where there was the largest glimmer of hope, because it actually got up to the trend line. Whereas in the case of the NQ, right, stronger. Let me turn off those profiles for you to get rid of a bunch of lines out there. Take a look at how it really never made it up to that trend line. The last time that was up there was back here on Friday at about 8:30 in the morning during the jobs report. That acted as resistance. So, you know, what you and I know, and I can't tell you the reason why these diagonal lines work out here, other than many have them on their screens, you know, it works, right? So we know that is a significant line of resistance out here, and not until the markets can get above those levels is there going to be the potential for a compelling future. Now, maybe that compelling future, and that's really, you know, you've got to say, hey, what's the impact of a devaluation of the renminbi out there? You know, well, the benefit obviously would be, depending on how you know, goods should be cheaper for Walmart. It's got to be one of the reasons that Walmart had traded to the upside last week. Hey, good news out there. Of course, you don't really know what their manufacturing deals are, but I used to import stuff from China all the time, millions of dollars. So I understand that those currency issues that are out there. But, you know, the instability from a market standpoint of currency battles, devaluations, things of that sort, you know, whether or not their slowdown is going to hurt, you know, you and I, or how's it going to impact the market, or how's it really going to impact Google? You know, I mean, you're still going to, you know, how many times do you go to your search engine and use Google, or whatever tools it might be that you use out there? You know, how's it going to impact Apple? And certainly they have their impacts out here. The whole point is that these markets, in order for them to really begin to and this is where you'll be able to sniff out the you know, any counter trend rally out here. You'll be able to judge it by the compelling future. So at this stage here, it doesn't look like it's going to be, certainly between 145 and 2. Maybe David White will be the one between 2 and 3 that will be able to get the engines rolling out here. Unfortunately, inside the NQ, that pattern out there where we were looking for that hammer candle to hold, we were looking for that 7th wave to hold, that gave way, and that failed. And that should have been a strong pattern out here, proved that it wasn't. Now the only message could possibly come from the ES or the Dow. Otherwise, you just got to go to the daily charts out here, which we were doing. And if you do take a look at the daily charts out here, and I go back to the futures contracts, the daily charts paint the picture. Here's the ES Mini. The ES Mini broke through a consolidation, right? We had a nice little consolidation inside the ES Mini. Basically, it was running from about 1989 to about 2100, give or take. That's the blue box on my screen out here. We know that what price did last week was what broke the consolidation. When you break a consolidation, because there's no I could draw an A to B equals C to the downside, but what really sticks out here is the consolidation. And this says that probably the 1882 area is that's where you make a measured move of that consolidation break. So, and as Gus would say in my big fat Greek wedding, there you go. Of course, he would say it a whole lot better than Stevie here, but there you go anyways. The Russell 2000, here's what the futures contract's done. It's made a butterfly pattern. Well, it had the potential for a 1.272 butterfly, but unless there's some kind of bullish reversal signal today or tomorrow, sometime soon, very soon, this thing wants to make a 1.618 butterfly pattern. And that butterfly pattern, I don't have that. Where is that? Let me see. Let's go figure out where that expansion of swing points would be. The 1.618, it's going to show up in yellow, about the 985 level. And you're at 1030 right now. So if the Russell decides to continue to crack here, it's probably headed to 985 to 996 before it runs into its next pattern. That would be the potential butterfly buy pattern out there. Dow's got a nice Gartley buy pattern potential out here, as does the NASDAQ. Of course, the NASDAQ, we just took a look at it, busting through a level of support. That says, if it can't hold 42.12, probably headed to 41.74 out here. You're at 42.18 as we speak. Okay, so enough about the indices. Let's take a look at something else out here. Let's look at what do we want to look at? What do you want to look at? How about some individual stocks? Let's go see what the heck is going on out here. Let's look at Regeneron Pharmaceuticals. I believe Regeneron is certainly one of the top 10 holdings inside of the biotech ETF out there, maybe one of the top 5. Today, it's trading down with volume of 502,000 shares. It's trading inside that August 20 or September 28th swing point. It's got big volume there of 3.1 million shares, but you're inside it. So you're inside with light volume. What does that mean? That means, short of any kind of reversal, you're going to go test the low. The low inside of Regeneron Pharmaceuticals is 435.51 out here. Pretty good chance that is where price is headed to. Let's turn on our profiles, see if there's any kind of horizontal volume-ish type support. Of course, my system seems to be acting up. There we go. It's trying to crack through its weekly profile low. So it needs to find support right here today. 496.69 is the number. If it doesn't do that, pretty darn good chance. PDG, that it'll get down to about 435.51. That's what's going on in Regeneron Pharmaceuticals. Let's go look at McKesson and see what it was doing out here. MCK, the ticker symbol. 2020's got 2020 vision. It's down $20.20 with volume. 5.8 million shares. Were these guys out with numbers? What do they do here? Let's see. They were. Earnings per share, 1260 to 1290. I don't see it. But here's what stockholders think of whatever it is that they just put out there. They're thinking stinky, because you've got volume blowing away the volume that was associated with August 24th, as well as September, well, in this case here, October 27th as well. So you've got a new high volume push. Now, it's not below the swing point from August 24th, but there's no reason for it to not at least go test it, probably get below that level. That level, by the way, I really want to tell you what it is. Come on, work with me. And that's really strange. Don't know what is slowing up the system out here. Shoot. The low out here from that trading day, boy, we had it. It's like the fish that got away. Well, all I can tell you visually, it looks like it's around the 160 area. Man, oh man, no idea what's going on here with the system. I'll try to figure that out as we go into this next breakout here with the Dow off 106, S&P down 19. VIX index, what's she doing out here? New high. New high, but man, I tell you, the VIX index, when you look at all those future contracts, they just say there's something wrong here. They're saying big bounce. That's really what they're communicating to you and I. Just needs a compelling future. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow is off 98. S&P is down 19. With regard to equities, let's take a look at some of these mining equities, see what they're doing out here. Let's take a look at Rand Gold, GOLD off $1.16, see what kind of volume this thing has in it today, 407,000 shares. Now, this had taken out, closed above a swing point from December 4th. That had 833,000 shares, and it closed above it with 1 million shares. Seemed like it was a sure thing, an A to B equals CD to the upside. But that fizzled out on Friday as price, moved lower, really kind of gapped down. Doesn't look like a gap, but and what I mean by that is take a look at where it closed on Thursday versus where it opened on Friday out there. So you get a nice little bear separating line. That is, in essence, bearish out here. So what is this thing doing? Well, The best thing that we can see out here is there was another sign of strength. There was a sign of strength on December 23rd with 1 million shares, right? Light trading session out here. So that area becomes our level of support. So it looks like Rand Gold should be able to pull back in, hold 61.45 to 61.90 out there. And if it closes under 61.45, pretty good chance it comes back into the 58-ish type area. Ticker symbol there again, GOLD. Agnico Eagle, AEM. What is this doing? This had gotten above a swing point. Well, let's take a look at it. It did a couple of things, right? It got above the swing point here for the trading day of December 4th. That had volume of 3.4 million shares. Got above with 3.5, and that was going into 3.3. Man, it had everything. Did that 100% move. A move, in essence, had some volume, as was moving up into that level. And really on Friday, the same type of thing, really an inside day, says that the trend ought to have continued. But today's pullback so far, 1.5 million shares, still lighter volume than the move up a couple of days ago, but needs to hold, let's call it its brand new market profile, TAS market profile of 28.10. And if it doesn't hold that, anticipate 27.85. And if it doesn't hold that, anticipate moving all the way back to 25.95. Now, the reason that we're looking certainly at Agnico Eagle is this, at both those stocks that we just looked at, strong stocks inside the mining sector, unlike Freeport-McMoRan, which is down at $4.49. Huge move, big volume to the downside out there. You've got Bear Gold, I think, looks fairly dull. Here's one that looks pretty good. Goldfields, GFI. Goldfields is actually up on the day, trading out at $3.16 out here. And what is this trying to do? Looks like it's trying to get up, get up into resistance. That's $3.37. That's its TAS weekly profile high out here. But this looks pretty good. So we want to watch some of these positive stocks. When I say positive stocks, good-looking stocks that have these, we're able to take out swing points with volume. Now, what's going to be required in order for that to happen, it's going to require gold being able to get some giddy up and go. And with the route to the downside last night in Asia, with the Hang Seng, the Hang Seng was off 565 points, nearly 3%. The Nikkei down 69. The Shanghai off 5%. No, 2.5% inside the Hang Seng, 5% inside the Shanghai, off 177 points. And that chart certainly looks basically ugly out here. It's going to need some. This is a weekly chart that we're looking at. And even with all that, I won't even say that. Let's just say, I tell you what I'll say. The show is over. So stay tuned. Our man Ziggy Stardust, the one and only Ziggy Stardust, David White, will be up next. Huggably, squeezably soft, Michelin Man. Have a great trading day. I'll look forward to seeing you on Turnaround Tuesday. Something to think about. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.